Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, we're just going to look back at asset market performance yesterday and then some of the economic data that we've seen coming through this morning, particularly in relation to the UK. So just looking back at asset markets yesterday, and when we look at how equity markets performed yesterday and thinking about the theme that we've been discussing over recent weeks around sovereign bond yields, really evident that sovereign bond yields stabilised yesterday, and if anything they came in a number of areas. So if we look at the US, for example, the US 10-year came in about 4 basis points to 1.68%. That then translated into a better equity market performance for the more growth-orientated areas of the market, so not surprising to see sectors associated with that theme performing better in the US in particular yesterday. So technology, biotech, those areas in particular had a better day. Small cap was the underperformer in the US, falling about 0.9%, but really it just serves to highlight the sensitivity of equity markets, and in particular equity sectors, to the performance of the sovereign bond market. European markets, a slightly different story about what was happening there. Really a number of factors at play. One, the increasing COVID-19 infection rates that we discussed yesterday, the additional lockdown measures being announced. So if we look to Germany for an indication of further measures being enacted there, that had a real impact into equity markets yesterday, particularly for those sectors that are more exposed to the reopening of economies. So if we think about travel, we think about leisure, two areas that were impacted in equity markets in Europe yesterday. The other area in Europe that did see some impact from the Turkish situation yesterday was the financial sector, because of the financial linkages between banks with stakes in Turkey, banks that do business in Turkey, falling as a result of the change to the central bank governor, and also just what that means for ongoing monetary policy within Turkey. So we saw the Turkish lira fall around 9% relative to the dollar. We saw the market in Turkey fall around a similar amount. So taken together, a fall of some 18% in dollar terms. So quite a significant impact when that would be translated back into any exposures that banks do have to the Turkish economy. So that was a matter of focus yesterday. Just then, as we've touched on, sovereign bond yields did stabilise. That was pretty much evident across a large part of developed markets, and it was evident also across the curve. So we just saw the same magnitude of move really both at the short, medium and long end. So sovereign bond yields coming in over the course of the day. One of the interesting things that came out yesterday was around Jay Powell, so the Federal Reserve Chairman, and the testimony that he'll be giving at the House today, very much keeping in line with the themes that he discussed last week, that yes, there's been an improvement in the economy in the US, but it remains a long way from recovering to pre-pandemic levels. But he also spoke about the employment situation, and we've touched on this in the past, where the Federal Reserve have now a focus both on full employment and also their average inflation target. On the employment side of things, it was quite interesting to read some of his prepared comments, just really around the labour force participation rate, the number of people that are putting themselves forward for work. We know that has fallen, and that's been one of the factors that's driven an improvement in the unemployment rate. But really, he was highlighting that this is something that we need to continue to consider, because in effect it's under-reporting the unemployment rate because labour force participation has fallen. So we need to see labour force participation also start to increase, it would appear, to help the Fed see that the underlying employment situation in the US is improving. So that's something certainly to watch going forward. Sticking with central banks, we got the ECB's weekly purchases under their pandemic assistance plan that they have in place. If we cast our minds back to the last ECB meeting, they said they were going to increase that, and they have done that. So if we look at weekly purchases, it was some 21.1 billion compared to the 18 billion average that had been prior to that change. So a step up from the ECB there. Just one other economic point to focus on from yesterday with US housing data. So if we remember, over the course of last year, housing was one of the real bright spots within the US economy. And that, I think, continues to be the case. If we look at prices, we saw prices rising about 16% year on year. So quite a material improvement in pricing there. The sales number itself did fall 6.6% to an annualised figure of 6.2 million. However, I think it's worth digging into that, and that's not because of a demand situation. I think it's actually because of a lack of supply of new housing stock coming in. So the housing market remains robust, although it's masked by just some of those trends within the data that we've seen. In the UK this morning, we've had the employment report coming through. Number of trends within that, really. You can see in the chart just in front of you, what I've got there is just looking at the number of payrolled individuals in the UK. What you can see there, we've seen a fall, obviously that steep fall that we saw last year. Some 28.3 million people today payrolled. That's an increase of 0.2% from February. So in February from January, sorry, I should say. And what you can see there, so that's slight improvement starting to come through as economic conditions have continued to improve. The unemployment rate itself was estimated by the ONS at some 5%, 1.1% higher than last year, 0.1% higher than the previous reading. However, that is better than the market estimate. So that's an indication of, just as you could see in that chart, slight improvements starting to come through in the UK labour market. Asia this morning, we've had a slightly weaker performance from equity markets, primarily coming through from a number of sanctions that have been placed onto China, just hurting sentiment a little bit there. That taken together, we're looking at a slightly weaker opening for European markets from the futures at this point in time. But I look forward to updating you on market performance tomorrow. So please do join us again tomorrow, and do subscribe on our YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.